Hello everyone, hope all are safe. So, if you're new to this channel, this is Sharanya Inti. I do make videos on lifestyle in UK, online trading, important updates in UK, so whatnot, many more guys. So, let's continue to the video, and this particular video is an extension of our part 1 which we have done last week. So this is an idea in order to get the investment options with the annual return percentage. So let's go to the video, guys. So now comes, because everyone has their own dreams, guys. It's just not very easy just to have your dreams and you're not working for it. I think everyone has their own dreams. If I buy a house today, maybe after 2 years I feel like, yeah, I need to have a car. So this is what is human wills, or wants, I can say. So everyone has their own dreams to achieve. In this case, one getting their salary and they don't invest in anything, they just keep it in their savings bank account. Do you think, are you getting anything in return out of it? Yeah, you are still getting it, but what is the percentage that you're getting it back from your savings bank account that you're just keeping without using anything? See, guys, here inflation plays an important role. See, you are just keeping, might be your salary is 30,000 on a monthly basis. You are utilizing 25,000 and you're just leaving the 5,000 back in your savings bank account without using anything. Yeah, on an yearly basis you're just using off like that, you're just using 25,000 and leaving 5,000 back in your bank account. So what is that you're getting back from it? Mostly, I think so, 3 to 4% of interest rate that you're getting back from the banks for your annual interest. Okay, so mostly banks pay this yearly once, or 6 months once, or quarterly, or some banks pay quarterly even. So why am I using the inflation topic here, guys? See, you are just leaving your 5,000 rupees for 2 years of time in your savings bank account. Okay, so what happens in this case, and what is inflation related? Like, how is the inflation related with this? See, if I wanted to, because we will not be able to live with food we'll not be able to live without food, transportation, or some of the important things where the demand where the demand is definitely it would be 100% same at all the time, but however the prices would definitely rise it up. It means that if I'm using a transportation, if I wanted to travel from one place to another place this year, okay, if I'm spending for transportation for 100 rupees for this particular year, after 1.5 month, so it means that, yeah, for this year, for the same transportation I'm paying 100 rupees, but after 1.5 year or 2 years, might be, I'm paying 200 or 150 nearly. It means the demand for this is actually same, but however the prices are keep on increasing. This is what I'm referring to inflation, guys. It means some things which we can't avoid, might be food items or any stuff you're considering it, you will not be able to avoid it, but however the charges for it keeps raising. Okay, so this is called as inflation. So the charges, so the price of one particular item keeps on raising, but however the supply or anything which remains the same. So this is what inflation I am referring to, guys. So in the same way, if you are considering it, you're keeping your 5,000 rupees on a monthly basis in your savings bank account, but what are you getting out of it is just 3 to 4% of interest that you're getting paid from the bank. So in this video, I would be able to let you know what are the different ways or different ways of investment that you can do it in India, and what would be the maximum interest that you're able to get back out of it. So guys, so first thing, as we are already discussing in savings bank account, see, wherever you are investing, you need to definitely consider three things, guys. Okay, one would be, okay, anywhere you're investing, you need to check all these three things. One is risk. Risk is nothing but how much are we risking, what is the risk percentage. If it's nothing but if something goes negative, am I able to get back the amount, yes or no? So risk is yes or no. Time, what's the time period that you're getting back your returns, how long is the time period. Next, returns, what is the percentage that you're getting returns. So this three things you need to have a consideration wherever you are investing, guys: risk, time, and returns. So in my view, what would be, it's not like I can't suggest you these are the top 5 investment ideas. No, I can't suggest you. I will let you know what are the investment options, how are we investing, and how are we getting returns, how much out of it. So in the first case, if we considering savings bank account, as it's already discussed, guys, savings bank account risk is definitely 0%. You know why? Because the amount that we are keeping, so if we are keeping 5,000, see, I'll frequently use two terms. It's nothing but principal amount and interest. So principal is nothing but if I'm keeping 5,000 on a monthly basis in my bank account, it's nothing but 5,000 is my principal amount. What is the interest that I'm actually getting paid for 5,000 is nothing but the interest. Yeah. So this particular principal amount of 5,000 rupees, yeah, you're just keeping back in your savings bank account. So are we getting that 5,000 from the savings bank account returns? Yes. So definitely we are getting it. Based on that, we are getting 3 to 4% of interest back to our savings bank accounts. So risk is definitely 0, guys. Time period is like, it's like yearly you'll be getting it, or 6 months once you're getting it, but still you're getting only 3 to 4%. Yes, I do agree there are some banks which also provide 6%, but still I'm not sure how you can trust. Yeah, you can trust. I'll not be able to say that you don't trust or anything, but that absolutely depends from bank to bank, but mostly I've seen 3 to 4%. So yes, so risk, time, and returns. What are the returns that we are getting it? It's 3 to 4%. So savings bank account and this 3 to 4%, how are they deciding it? It definitely depends upon the inflation, guys. Inflation is whatever I have said it to you. Yeah. So next what would be the other consideration is fixed deposits. See, in order to let you know what is fixed deposit, see, if I have a certain amount, might be 20,000 you consider, I wanted to invest in a certain bank of 20,000 for a certain period of time. Might be for 6 months, 1 year. It depends upon your choice. So if I have a certain amount of 20,000, I wanted to invest this certain amount for a period of 365 days. And maximum returns on a fixed deposit, guys, you'll be able to get it up to 6 to 7%. Mostly I have seen. So it's 6 to 7%. Yeah, which is actually better than the savings bank account. So you're just keeping this fixed deposit of 20,000 rupees for a period of 365 days. Yeah, you guys might come back and ask me, what in case of an emergency in between this 365 days? That's absolutely safe, guys. You don't have any problem for your principal amount of 20,000. Whenever you want to break, you will still have that 20,000, guys. Okay, if suppose I want to break this particular fixed deposit, it's nothing but I don't want to continue this fixed deposit, might be due to a medical emergency or anything. Okay, so in this case, how this works is like, so if you just want to break your fixed deposit on 200 or 125th day, okay, so if you just want to break this fixed deposit on 125th day, the bank you have created a fixed deposit will be able to publish you a sheet, guys, on the rate of interest. It says clearly 0 to 30 days this is the rate of interest, 40 to 55 days this is the rate of interest, so 60 to 75 days this is the rate of interest, 100 to 150 days this is the rate of interest. So when you're breaking a certain amount of 20,000 on 125th day, what would the bank do? They will just consider that interest rate which was published on 125th day, which was given to you, might be 3 or 4% you consider. So this 4% minus 1% of penalty factor on the interest, guys. It's not on your principal. Please don't get confused. Your principal remains the same if you want to break the next day even. Yeah. So for 125 days, bank has given you 4% of interest rate minus 1% of penalty factor on the interest. So what is the amount now? 3% of interest would be paid on 20,000 for 125 days. That's how fixed deposit works. So fixed deposit, I think risk is zero, guys, because you don't have any thing for your principal remains same if you want to break the next day even. What is returns is mostly 6 to 7%, guys. Even this is also a good thing where you can invest and then just sit. That's also one of the best option I can suggest. And then time is based on the time frame that you wanted to select for. But still, are we getting more out of savings bank account? Yes, definitely yes. You can just have a check for your company, your prospective banks for the fixed deposit. If you do have your online banking, you can just open your fixed deposits through online banking, guys. There's no problem at all. Next, what would be another option? Gold. Yeah. So I consider gold also is a very good option for investing. But however, this absolutely is a risky thing, guys. You know why? It just depends on the market news. This is quite speculating, or it's a quite forward movement sometimes, backward movement sometimes. So this risk I can consider as high, guys, because see, now at the present state, if you're considering it, gold prices are in a rise. Yeah, so this is not the time to buy, guys. This is the time to sell. Yeah, I'm talking in terms of trading, guys. This is not in terms of your own or old original jewelry. I'm not talking about that. So I'm talking about in terms of trading. Yeah, so in this particular time, as a gold, so this is not the time to buy. Okay, if a person have bought the gold enough, now he can make profits by selling it. Okay, when we are actually purchasing at a lower cost. So this absolutely, guys, gold returns are up to, whatever I've seen is up to 9% on an average of yearly per annum, 9% of average returns. But however, I feel this as risky. It completely depends upon the market news. So this is also one of the good option for investment. Next, real estate. You might have heard more about real estate. So real estate, mostly whatever I have seen, is mostly up to 9% of returns, guys. 9 to 10% of returns on an overall annually. But as a middle class, I don't prefer this. But this is also a good option only, guys. But because in order to buy a property or anything, it definitely requires lot of amount. But the plus point is an asset would be on your behalf. It's nothing but an asset would be on your beside with you. But risk is definitely high for it, because it's not a very small amount to buy and keep it off. It's a big amount, and I consider risk to be high for this. Next, what is coming to share markets? The fifth option would be direct equity. It's nothing but share stock markets. Guys, again, investing in stocks might not be everyone's cup of tea, because it is volatile and there is no guarantee of returns. It is definitely volatile, guys, because but mostly I've seen 13 to 14% of returns are definitely there for this share markets and stock markets. But definitely it is volatile, guys. You should have a sense of buying, selling, when to buy, when to sell, what are the things that you need to consider while you're just buying stocks in particular share markets. So average, it have 13 to 14% of returns. But are we safe? It means that no, it's like risk is high in this. But still, this is like, you should just go through the companies, like on the next coming up videos, I'll be able to share you what are the do's and don'ts that you can do while you're just buying some shares from the market. Yeah, so this is absolutely important, because in order to enter to share or stock markets as a beginners, there are some tips to be followed, guys. So what would be the best way to start trading? What are the tips that you need to avoid? Everything would be coming up in the next video, guys. Yeah, so stay tuned. If you like this video, please like, share and subscribe, guys. If you have any comments or any questions or any queries with related to the product that we have discussed today, please comment back. I'll make sure that I do get back to you. Yeah, so any further queries, please comment back, guys. I'll be able to come back with the answers for it. So thanks for watching. Please like, share and subscribe. Thank you so much.